Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Monday. It's a happy Monday to y'all. It's August 31st, end of the month here. And a week from Labor Day weekend. Wow. Hey, we got one economic news release today, and that's the Chicago PMI, which is the manufacturing in the Chicago or Midwest region. So anything above 50, as you can see, is expansion. So we had a slight dip here. We had a 54.7 back in July, and it dipped down to 54.4, but not a huge change right there. Still at least modestly. But the stock market's down today. Dow's down over 100 points so far today. And it all comes over from the weekend and today with the uncertainty over rate hike. So we, as we had said last Friday, they started a two-day meeting, the Fed members back in Jackson Hole, Wyoming, and Stanley Fischer, who was supposed to give a speech on inflation, still left the door open for a possible September rate hike. As soon as investors start thinking that, no, it's basically nil, that they probably won't have a September rate hike, a couple Fed members were still left the door open that possibly it could happen, and that a lot of these commodities and stuff that are going could subside a little bit, where it would make it possible for a possible rate hike. So this Friday, the job numbers will be coming out, and this will be important indicator for them, the investors, as to if they get strong jobs numbers, then they probably feel that possibly the Fed will raise rates. If we get a weak number, that maybe they might hold off on raising interest rates. So Friday's gonna be an important day for us this week here. Also, China's markets have been kind of in a huge flux of late, as we've known. They've been the Chinese government's been pouring in large amounts of money into the stock market to kind of stabilize it. And basically, today they came out and said that they're not going to be continuing pouring large amounts of money into the stock market to stabilize it. And and they even came out comments saying that somebody's been leaking too much information, and that they'll be punishing those folks. So I guess I wouldn't want to be in those people's shoes. That will be sought out and for destabilizing the market, as they'll be convicted for. Yeah, let's take a look at our bond market and see what interest rates are doing today. So right now we're up. So we're hanging just above the 10-day moving average. The red, as you can see, we take the lower portion of that. So we're up above that, and we're about 19 basis points. So that gives us improved pricing from where we were on Friday. So far we're okay in terms of pricing. We're in better shape today. As you can see, we are heading upwards, which is it's stabilizing the bond market, which is helping us out. So this week could be a good week, but be careful again up on Friday. If depending on what those job numbers, it could bust us above that 200-day moving average. It could also push us below it. We are approaching that 200-day moving average again, and that's been a tough resistance. Most time when we hit it, we've been pulled back, except for that crazy day last Monday. When China decided to, when the Dow dropped about 1,100 points, that was the only thing that brought us above that. As soon as the next day came around, when they got to their senses, it brought us back down. So, but at some point, we're going to be squeezed there from the 25-day moving average, which has been a good floor of support, and the 200-day moving average, which has been a tough ceiling for us. So, we're going to come to that point here probably very soon here. All right. You guys have a wonderful week, wonderful day. Thanks so much for watching. We'll see you guys tomorrow. Take care.